All right. Good morning, everybody. So 2023 so far has been driven by the AI craze, and NVDA just set records on its on a lot of different metrics. It's the reason we're seeing such a move reverberating throughout the rest of the market, and that's something to keep in mind. NVIDIA might keep those gains, some of them, most of them. But the wave that lifted up the other things around it may not. Today we got a reasonably decent list of things going through, but we're done by lunch, right? So we can see Bank of England 11:30. That pretty much wraps it up. So for your 0-day trades, the afternoon looks pretty good. They are sounding, pretty dovish over in Europe, talking about how they're mostly done, or it seems like they're mostly done with their rate hikes, given the market that impression that they're going to pause soon. We did get they didn't change our rating, but they put a warning on our rating. It's still just not done yet, right? So for the foreseeable future, I'll use the same warning I used yesterday. If you don't normally trade with a stop, you might want to consider trading with a stop for the near term, right? Any talk about this debt ceiling, whether it's nearing its completion or that they're as far apart as they've ever been, and it doesn't look like they're going to get it done, any kind of news on either direction is very likely going to cause an immediate move in the market. And it's bad enough trying to trade when we're just dealing with price on a day-to-day basis. It's even worse to see just a sharp move come out of the middle of nowhere and take the market in one direction or another. So proceed with caution, right? If we look at the economic agenda on FX Street, they have these gauges to show you the anticipated impact from the event, which is really great. If you're newer to trading, you don't know which events to really be concerned with and which ones maybe don't hold so much of a threat. And so this is a really great way to gauge that threat level. TradingView does the same thing, right? TradingView has a very similar feature, only it looks like cell phone signal, right? Those little bars that get bigger. Either way, it's still a gauge on the economic event for the day and how likely it is to be an impactful event. And the reason that we go to multiple sources, we look at Finance Juice, Economic Calendar on FX Street, and we look at Thinkorswim, is there are literally hundreds of events going on through the day, every single day, all day. We don't hear about even a tenth of all of the different economic agendas that are on the table every day. And so at different websites and at different locations, they may have something on there that a different location had. If you only look at one spot every day, you're going to miss some big ones. So look around, try to find something that works for you. Market Watch always has the bigger tiered ones, the ones that they deem more important. And so this is like the stripped down version. But one, it's really clean. I think they do a great job on that. And then two, you're not flooded with every single event out there. They only list the ones that they deem most relevant. And if they don't think it's relevant, they don't even bother with it. On their list, 8:30, 9:50, 10 a.m., and 10:30, and we're done. There's the spot gamma levels for the day on the SPX and the ES. Right, so we're looking at US oil here, WTI crude. We're still range bound. We're still bearish. We're underneath the 200, underneath the 50 on the daily. It's the very definition of bearish when you're underneath the 50 and the 200. But we are challenging that 50. Challenged it on Wednesday, took a rejection Thursday. We followed through with that rejection with an inside day breakout. The blue line under here is the 10-day, and you could consider that run into the 50 an expansion away from the 10-day, and now we're just pulling back down, trying to get another shot at it. Just remember, moving averages that they're not support. So when we come down to this 10, we're not looking at it to be a line in the sand that's going to hold up energy. Here we're looking at the same thing, but on the weekly chart. We're underneath the 10, underneath that 200. Well, we're underneath all of them, right? But we're trying to make this TRB setup. And on the weekly, that's a really, really nice TRB setup. The expansion and the follow through on that would be back up into 80, maybe 83. I really like this setup. The thing is, it's had a lot of trouble, from 72. Well, we'll call it 73. When we get above 73, it just can't seem to hold on to it, and it's coming back in again. So to me, it's on watch. I think we could get some reasonably decent swings in energy, specifically more in oil. So you wouldn't want to go after like XLE, right? You'd want to go after USO or even individual oil companies. Gold still holding this basing pattern. The base is really wide, so it's not really exciting, right? If it was IX10 and we were in a really narrow range, it'd be so much better. But it's a huge range underneath the 50. And really, I'm looking for that 10 period crossover. So we're on a daily. We got the 10 overhead. We're holding this range, letting the 10 come down to us. Really looking for that 10 cross. If this works out well, it'll be 10 and a 50 at the same time, and then we'll kind of use that for a surge play on gold. Now this is you know, the big one, 1960 and all that. So you're going to want to look at GLD, GDX, you know, look at gold, miners, dust, silver. Some are cleaner than others. Good tip on that is just use what's got the most liquid options. Let that be your kind of line in the sand. All right, so volume a little heavier throughout the later part of this week than we had in the earlier part. They're certainly not waiting today. It's not in the extreme levels. If we were sitting above 200, I'd be a little concerned. But sitting in the 130s to 140s, that's just fine. We did manage to get back above VWAP, and other than that initial jolt that we saw after 4 o'clock, we haven't really expanded much. So we set our Globex high real early in the evening, and that's still holding. But we are inside day still with 41.66 yesterday's high. The daily pivot today is the RTH high of yesterday, which is really nice when you got things that line up like that. The problem is we've crisscrossed through that zone so many times already this morning that it really doesn't have any value. So the RTH high at this point, we want to just throw that one out. There's no reason to even keep it. You can keep the daily pivot, but we've crossed through that already a number of times and it doesn't have any value now either. So you can take that one off. Right? I had someone talking the other day about how overwhelmed they were by how many lines and pivots and everything they had on their chart. And they were keeping open, high, low, close from the daily going back, I don't know, for as long as they've been marking it. And as you can imagine, that's going to really pile up with a lot of lines. And it gets to the point where you can't even really tell what has weight or what has merit because you're just crowded by all these old ghost lines. Take them off, right? Remove things that no longer have merit or value so that they're not distractions. It gets to be about as bad as, you know, those people that have 30 indicators on their chart. End up with analysis paralysis and you can't even see price action anymore. This really looks like a handoff session at this point. A couple of major firms just happily passing positions through without any real struggle on or argument on price. But it also shows that there's no leadership, right? There's no dominant theme. You pick a day like that, and you know it's a common phrase to just say everybody was buying. There was no firm trying to short that, right? No institution, no firm, no fund was out there trying to short that thing. Everybody was doing the same thing. A very clear message in the market. So when you got a day like this, it's two-sided trading. You could literally have people going long and going short and both making money in all of this. And that's what we got. Some couple of institutions in there passing everything back and forth. They're working through repositioning and they're doing it in a calm, balanced way. So until this ends, standing aside would be a good way to go. Really clean level, 41.30, which is a cog line. To the downside, it's the Globex low, and 41.57 to the upside, which is the Globex high. we get outside of that zone one way or the other, you've got a good play. All the way down to the RTH low of yesterday, 41.14, or to the high of yesterday, 41.66. And then we are underneath the weekly pivot. So if we get an inside day breakout, that's going to be the target, right? That's 41.82. Those are major levels, and there are some voodoo lines to deal with. Really close to yesterday's high is that 41.65 voodoo line. So if we get outside of yesterday's high, that means we already made it through the voodoo line. And we absolutely would want to target that weekly pivot point. Just remember, when we get to that pivot point, the first touch play is going to be probably your best bet, right? That we get there, touch it, and immediately reject off of it at least once. That's a good 5 to 7 points on average that you can get on those first touch plays. And 10 contracts and 5 points, you're done, right? Get your day done and go do something else. In and out of the entire trade in 35 seconds. Life is good. All right, so we made it through the point of control a couple of times, both directions. Now we're back above it, but we still haven't been able to expand beyond it. And what you'll find a lot of times is what we had back here, right? That we get around that point of control and then we just can't get away from it. Every time it tries, it kind of comes back in again. That's what cogs do, right? Those center of gravities. When we work or do the work to validate a cog line, it takes weeks before we can add a new cog line, right? Weeks of analysis, months of data. And what you'll see if you go in and you're doing the work is that when price gets to one of those cog lines, it becomes like this safe space, this neutral zone. All the hedging just kind of dies away. And when price starts to push the edges away from the cog line again, think of it like a 5-point band above and below a cog line. When it starts to push the edges of that band, then the hedging starts to kick back in again, and you start to see the flurry of activity showing that we're leaving that center of gravity or attempting to leave it. It's very often the same thing with these center of gravities or the point of control. You can see that if you're using flow tools and maybe tie it in with a TPO chart or a footprint chart. It's not really useful for trading, right? You wouldn't want to try to trade that kind of flow, but it's really awesome to try to understand the price movement that you're looking at. All right, we do have a VPOC from yesterday. So now we've got one on each side. Got one above us, got one below us. $41.23, $41.24. Either one, I wouldn't get too hung up on it. And $41.93. So one above us, one below us. And remember, these aren't support or resistance or anything like that, right? It's first touch play. It's a little bit of gravity. If we break, say, that Globex low that we have, 41.32, then that would be one of our targets, right? We would aim for that. So we're strictly looking at voodoo lines here. You got that 41.65 and 41.40. So we're in between both of those, but we are nowhere near one of these bigger lines, 42.04 and 41.01. They had different names for these. which I should probably go back and get their names so that when I'm pointing them out. But they're they're kind of funny names. Like there's the tree line and the snow line and the I don't know. We'll get back to that. We do have a quarterly level, 4101. It's not really going to add much to everything since 4101 or 4100 is already a gamma level. But you know, it could have been another location and then we would have wanted to know about it. These are those spot gamma levels. They're just already marked on the chart. So 0 gamma 4150 area is basically right where we're at. We're on this we're right on the precipice, right on the edge. And then the volatility trigger is at 4183. All right, these are the cog lines. So as I had mentioned, 4111, 4104, 4131 should be in there. But it hadn't been validated at the time, so I hadn't added it. It just needs to be added. All right, we expanded beyond the edge of the weekly expected move, and now we're back inside the box. We close inside of the weekly expected move box better than 70% of the time. In good times, it's 80%. For the S&P. For the rest of the market, 70%. So the fact that we got outside the box yesterday and then came back in, it makes perfect sense. And from an options standpoint, that's one of the strategies that I use. I didn't use it yesterday. I already had different reasons to be trading the options. But if I hadn't already had positions that I was working on, then that would have been a good way to go. Right? The idea is that when we get outside the box, we're very likely going to get back inside the box, whether from above or below. And if you want to kind of, you know, backstop that and see how often it would work and how often it wouldn't, it's a very simple thing to put the indicator on your chart and just to go back week after week and see how often it would have worked or not. Count back the last 10 times that we broke out of the box. And then after we broke out, did we get back in again? So you don't have to try reaching out and asking me, hey, does that work? Run the numbers, do the work, bring it up, look at it. Answer the question for yourself. So we're on our way back down now on the 10-week, trying to gauge that distance of have we moved too far, too fast, and did we outrun the 10? And if we did, how far away are we? Well, we're really close to the 10. You can see kind of like a sine wave that we've rolled back down, got near that 10, and that we're ready for either a new wave back up again, or that we cross through and actually get into negative territory. On the daily, we're still underneath the 10, which means if we get a drive to the upside today, we're going to be dealing with getting through that 10, right, and getting above it. So you can see we hit the daily 20 period moving average in the overnight. It's what we got hung up on back here. It's also the hourly 50. The 10-day is at 41.63. So not quite at that high of yesterday, but right up in that same area. And this is really important to kind of grasp, right? If we're going to get an inside day breakout, we've got to get through the 10, we've got to get through a voodoo line, and then we've got to get through that pivot point, which was yesterday's high. All of those things if we're going to get that breakout. So I'm not saying that we can't break out, but that's a lot of stuff to get through. We're going to need propellant, right? Some kind of fuel to get it through that zone. Otherwise, we're very likely not going to be able to get through that level. There's just too much trash there to get through in it. And I think it's going to be difficult considering how far away it is too, right? So again, it's not that we can't, just, keep in mind, if they come out with some kind of debt ceiling resolution, that could drive us through that zone. Pivot points and markers and levels, none of it will matter on news, right? So if you get that kind of flow, it's just going to punch right through. It won't matter. All right, so the VIX is down and nat gas. All right, we got US dollar China here. We are on a weekly and we're getting that inside week breakout. Here on the daily with an inside day breakout after that doji on the day before. Look at these moving averages, beautifully spread out, lined up perfectly. As like a textbook example of bullishness. Same thing with US dollar Japan. Moving averages spread out really nice. We're above all the major levels. We had a cup and a handle. Now we're getting that expansion. I think we'd have some serious situation going on if we seen US dollar Japan getting up into those 146 area. But, I just measured that cup and put it up there, and that's what we got. So one thing that we could do is at least focus on, say, 50%. It gets us up to about 144. Right? Obviously, I'm just being a little sloppy with it, but it gets the point across. That's not a perfect measure, but it'll do. So 144. That's really going to take gold, silver, miners down, right? That's going to be pretty rough. So Europe is right on the line here, that 200-day, kind of a make or break moment. Then over the last 2 days, they've been defending this really well. You can see those wicks had an inside day breakout to the downside and they brought it right back in again. But it's a struggle, right? And if you look at FX juice or finance juice, where they're saying, they're trying to calm everybody down and they're saying they've pretty much reached the end of their rate hikes and maybe they're going to pause soon. That might help with this a lot. And for the dollar, we're now going to be dealing with a run back up, right? So it did get through that sloping 200. The week's not done, but at least on the daily, we closed above it. And so far, we're continuing to drive with an inside day breakout above that level. So we're going to be looking at 105, maybe 106, which would get us through this rally based drop. The thing is right now, just getting to that and be focused on, say, the proximal line on that. Draw the box. So 105.62 and 105.88, both below that 106 level, kind of the line in the sand. 103.5 is a really big deal anyways. So the fact that we're above that, we should have already started to see some reverberations from this, right? Some repercussions, and we're not. So that's something to kind of keep your eye out for. Ten-day, 30-minute volume profile is showing us that we got to get away from that point of control, right? So what's going to drive us there has to come from one of our risk on sectors. Technology, finance, consumer discretionary. When we look at how many names are up in the NASDAQ this morning, at least 0.5%, 25 out of 100. So 25%. That's not overly bullish, right? And I'm still working on this idea that perhaps we should be using the benchmark of 100, or 1%. So then we'd be asking the question, how many names are up this morning? At least 1% in the NASDAQ. Only 20 names, so 20% of the NASDAQ is up 1% this morning. Out of those names, how many are semiconductors? Because, if it's just a rising tide due to NVDA, when the tide goes out, so are a lot of those names. And I mean, yeah, we can see a lot of them, right? MU, ASML, AMD, Broadcom, NVIDIA, KLA, sure, big list. Outside of that list, we don't really got a whole lot, right? Packaged software and some FANG names, Google, Tesla, Microsoft. Snow, by the way, which is one of the NY FANGs, got annihilated this morning. So probably won't be on the FANGs list for very much longer. So for the S&P, how many names are up at least 0.5%? 11. That is not bullish. And out of those 11 names, a couple of them are FANG names. So we got Meta, Google, Microsoft, Tesla, NVIDIA. It's not every single FANG name, but pretty good list of them. So really, we're back to seeing that mega cap tech. So what you're looking at here is a ratio chart of the unweighted versus the weighted S&P. And you can see how steep the move is, right? When it comes to looking at a ratio chart, what direction it's pointing, that's part of it. But then also how steep the move. And technically I should be, using a line or an area chart. It would make more sense. So this is very likely to pick up speed, considering, how much everything is moving today by those FANG names, mega market cap tech. Right, so we're looking at the S&P. I filtered it down, trying to get it as close to 100 names as I could. It's not a perfect science on that, but I got 106 names here. It will remain gray until at least 0.5%, and then it'll turn red or green. And so we can see, most of the market is sitting in that gray space. But now, we just come in and make a little adjustment here. And when we do that, the negativity really starts to shine through. So other than, a kind of a leg up from NVIDIA, the rest of this market is flat to negative. And that's something you really want to carry forward this morning, keeping your eye on those FANG names. So we already talked about US dollar Japan continuing that expansion to the upside. If we're looking at gold to break down, then, we got to get through, call it that 180, 181. So I would expect more of a wick through, right? Maybe a drop down, but a rally back up. I really don't expect that this is going to be coming back down into that 168 round, right? Maybe fill in some of these gaps, and then a rebound back up. Precious metals supposed to do pretty good in 2023. So, we don't really expect these to give it all back. Although silver maybe is taking the other side of that argument. So half back, we're there. Silver really needs to kind of hold the line here, and at least on the week, not give up too much more. It's just about to the point, if it gives up any more, it's going to just give it all back. We still do have higher lows, but this new higher low isn't a higher low yet. It's not going to count for a higher low. until we've left it behind and we've rallied up off of it. Until then, it's just a market heading to the downside. But once we do get it, we'll have a full set, 2 higher highs and 2 higher lows. And that is the trigger for a trend, right? Or the criteria, the definition of trend. There you go. 2 higher highs, 2 higher lows. And Bitcoin's getting a little bit of assistance this morning too. Even VITO. So when I see Bitcoin itself is up, it's like, okay, that's fine. But do we have any of the others like GBTC? I want to see that up, and then BITO, because BITO really doesn't get morning flows. So when I see it that it is getting morning flows, then that really adds to the risk on, right? Bitcoin is a representation of liquidity. I say a representation of risk, but whatever. When people are feeling risky, they'll trade risky stuff, and it really doesn't get more risky than Bitcoin. Got a flat top wedge forming too. That ought to turn out really nice. All right, so bonds and the dollar open early, right? They don't open at 9:30 with the ES and the NASDAQ. They open early, and we can see that early open has given that dollar the move to the downside and bonds the move to the upside. Right? The dollar maybe isn't quite open just yet. It's somewhere between 8 and 820 that the bonds and the dollar open, and that means TLT and TNX. You can start charting with those now. You don't have to use 10Y after 815, 820. So we're seeing the 10-year pullback, the dollar pullback, bonds popping up. We want to see bonds and stock both moving together. And then on the stock side, we want everything. Today, we want everything. So when you look at the sectors, you want to see 8 or even 9 out of the 11 sectors moving to the upside today. Keep your eye on how far the NASDAQ gets away from that VWAP. And I don't know how useful the NY Fang chart is going to be today with snow so far down and NVIDIA so high up, right? It's really going to screw with this thing, which is an index, right? Trying to gauge or measure how these things are doing in a basket. Here I've got Apple, Microsoft, Tesla, Google, NVIDIA, Meta, AMD, Snow, all piled together like making my own basket. And I mean, yeah, the flag is clear, right? The little scoop, and now the breakout, the continuation. This is like using NY Fang, but in the pre-market, right? And you know what? NY Fang isn't a tool that you can use in the pre-market, so you have to kind of come up with your own thing, right? On Thinkorswim and on TradingView, you can make your own index or your own ETF. Just use the plus sign in between each one of those names and then divide when you're done by however many names you used. I used 10 names, so I divided everything by 10, and I got this chart. It works. So I don't know how useful the NY Fang is going to be today, just because of snow in one direction, NVIDIA in the other direction. It's all going to be watch the clock. We're looking for the news to come out on the debt ceiling. My baseline bet is they're going to buy themselves an extension, maybe 6 weeks, 8 weeks. And then in that period of time, they're going to resolve the debt ceiling. That's my baseline bet. And they're running out of time to even announce what they're going to do to solve this, right? So that means we're very likely going to get news this week, one way or the other, that they've accomplished something or that they've extended it. Either way. We do have additional auctions today at 1 o'clock, so keep that in mind. I know earlier I said that by noon we're good to go on your 0 days, but these auctions matter, right? So really watch the clock. Everybody be careful, be safe. I'll see you.